Hey, what's up, guys? Back for another video for you guys. And in this one, it is going to be covering fair value gap continuation trades and dip buying. Dip buying is very similar to fair value gap continuation trades because a lot of the times price, say we're in an uptrend, price will dip down, respect a fair value gap, and then bounce back up. But it's not all the time. So some other times it'll dip down, respect the support level, and bounce back up. And it can be vice versa for if you're going short. It can bounce up, respect a bullish gap, and then continue lower, or it can bounce up, respect a resistance level, and then continue lower. So it's pretty straightforward. It's not complicated at all. So this is from today, which is the 6th of May, 2026. It's actually my birthday month. My birthday is May 26th, so 20 days. I'm hitting 40 years old this year. Where the hell has time gone? So, anyways, real quick, so let's just look at this chart right here. So at this time, this is last night, okay? So this line is 6 p.m. last night. So I just went through before I took this video and I just marked out some gaps so I can show you how often this happens. So one of the things with this is if the number one setup doesn't show up, this is typically my next setup that I go for. Also, if you miss the number one setup, you can then trade. You can then look for these setups instead of chasing price. Just wait, because this happens every single day. I don't care what anybody says. What I'm going to show you right now happens every single day, and it happens multiple times a day. Okay. So, real quick, the first one, pretty obvious. Actually, we won't go to that one. Let's go to the bottom. We'll work our way up. Then that makes sense. So, you can see, let's make it bigger. So, price pushed up, right? And you're like, oh shit, I missed this trade. Don't chase it. Okay. I actually just saw another one right there. Anyways, don't chase it, right? Look what happens. Creates, or I'm on a 5 minute time frame, creates a 5 minute bullish gap. Okay. So what do? Wait for price to come back in to this gap and wait to see how it reacts from the gap. Okay. It comes down, does not inverse the gap. We start trading higher. What you can wait for is the inversion of this gap right here, and you can enter. You would take a little bit of drawdown, but still it doesn't inverse the gap. And where does it go? It comes up to here. Okay. And then it reverses again. Why did it reverse? Because of this bearish gap right here. But look what it does. Again, it comes down, respects this gap, pushes higher. So this is a fair value gap continuation. Why is it a fair value gap continuation? This is a bullish gap. We're trading higher. It comes down, it respects the gap, and it continues higher. So it's continuing the trend from the fair value gap. Okay. Um, okay. So then we push higher. What a crazy 5 minute candle creates this big 5 minute gap. You miss this. Do not chase it, guys. I know you want to chase it. I used to chase these all the time. And what happens most of the time, we end up losing money on them, right? Because there's going to be a pullback at some point, especially when you see something like this. Okay. Mark out the gap and look how perfect this is. This is also why I always have my 50% level on my fair value gap boxes. In the settings, you can have it so this line isn't on there. I think it's stupid because the 50% level, the consequent encroachment level, is very important. Okay, look at this. It wicks it, doesn't break it. What do? Boom, we inverse this gap and we continue higher. So, you know what the number one model is. We sweep liquidity, V shape, right? We got our V shape up higher. Um, and we inverse a bearish gap if we're going to the upside, right? So right here, okay, it's a fair value gap continuation model, but you can also intertwine the number one setup with the fair value gap continuation model. So you get some confirmation that we are going to push higher, right? It comes down, it respects this. Don't just enter. Okay. Wait, look at this. You got this bearish gap right here. Okay. Boom. We inverse the gap. You can either wait for the retest and get a cheaper entry. It doesn't always retest the gap, matters how much momentum it gets. But even if you enter on this, you put your gap below the bearish gap and you just ride it higher. And boom, that a beautiful trade right there. So it's fair value gap continuation trade with an extra confirmation of inversing this bearish gap. Okay. Now on the downside, these were all on the 1 minute. This is on the 5 minute chart. I know these were on the 1 minute chart. So let's go over. Okay. So look what happens. We come up, and this is 7 a.m. this morning. Okay. We push lower, push lower. I made some money on this today. I know that. This is where I made $1,000 right here. And it was from trading these gaps, right? So, okay, you missed this rundown. Don't worry about it, guys, right? There's a 1 minute bearish gap right there. What's it do? Come up, it retests that gap, and it flips and it goes back down. So it's a bearish gap. We're now in a downtrend, creates a bearish gap. Price comes up, retests the gap, does not inverse it, and it continues. Fair value gap continuation. Boom. Here's another one right after it. Creates it, comes up, retaps it, down. Here's another bearish gap. Goes down, retests the gap, pushes lower. Okay. This is another way of how you stay into trades longer. Okay. Say you got into this trade up here. I took this trade earlier today at 7 a.m. This was the first trade I took, and I took my profit at this gap. Actually, it was this gap right here. There's a 5 minute and a 1 minute gap right here. This wick is what took me out. Anyways, say you got in right here, okay? It comes down and you're wondering, and you don't have a take profit set, or say you have a take profit set all the way down here or all the way to this swing low, right? Okay, you're trying to get a big trade. How do you stay in the trade and feel comfortable with staying in the trade? Well, this is how you do. When it's going down, it makes these gaps and you just wait. What happens? It doesn't inverse the gap. You stay in the trade. So after it pushes away from this gap, what you do, you trail your stop above this wick. Okay. It pushes lower, creates another gap, put this gap on your chart. Okay. You're still in the trade, comes up, it respects it, pushes lower. You now trail your stop to above this wick. Okay. Now it pushes lower. You're still in the trade. There's this gap. So you put this gap on your chart. It comes up, doesn't inverse the gap. It pushes lower. Now you take your trailing stop that was here and you trail it here. And after it made this big move, you could take your trailing stop from here and you could put it up here, right? Or wherever you're comfortable. Or, you know, if you put it above these gaps, always put it a little bit higher because these wicks, I hate it when I get taken out of a trade by a wick. It wicks me out, and then it pushes in my direction. It pisses me off. But that happens, right? And then it comes back up, respects this gap, boom, pushes lower. And what happens? You would have got full profit from here, and that would have been a crazy trade. That's one thing that I need to work on. I'm not perfect either, guys. So I was in this trade up here today. I took two trades. I took that trade and I took this trade. I should have held from here, right? And I should have done exactly what I just said, and I could have got a banger trade. So that's part of my psychology that I need to work on as well. Always evolving as a trader. So, all right. So, and yeah, anyway, so let's keep going. So, I'm going to take this gap off and this gap off just to clean the charts up. Okay. So, this right here, this is a 5-minute gap right here. How crazy is that? We trade this far away and then we trade all the way back down at this gap and then we trade higher. For all the people that say fair value gaps are bullshit and they don't work and this and that and ICT is bullshit, how can they say that? I'm proving it to you right here that fair value gaps are so powerful. They're so powerful. They're so reliable. Okay. This was the trade, my last trade of the day. I took off the open. I called this out as well in my Discord. Mentioned if it respected this gap, I wanted to see a continuation higher. Okay. Uh, excuse me. And that's exactly what happened. Okay. All right. So say you miss this. Who cares? Wait, guys. Just wait. Okay. Look at this. Drag this over. This is a bullish gap. What happens, guys? It trades back to the gap, doesn't inverse it, respects it. You could take this entry right here with this momentum, put your your stop loss underneath these wicks, put your TP. I like to put them at the bodies, sometimes 50% of the wick, because I don't trust that price is going to get right to this point at the first time, and I don't want to wait through all this drawdown. So I like putting my take profit at wicks or at bodies, or I'll do like 50% of the wick a lot of the times because it likes to retrace like 50% of the wick. You can see it did it right here. It did a little bit more than that wick, but this one's like on the spot on that wick, right? So, anyways, or you just wait. Say you want to wait for some more confirmation and you want an inversion to happen, okay? And you want a decent entry, right? So there is an inversion here, but you would have to enter here. Your stop loss would have to be down here, right? So, but look at this. Look at this bearish gap right here. Okay, look at this bearish gap right here. Okay, we trade down. Look at higher low, higher low, higher low, higher low. Inverse fair value gap. Boom, enter. I'd put my stop loss below this candle, right? Below this IFVG. Okay, and where do you put your take profit? Well, you really want to put it up here, and it does end up hitting it. It took a while to hit it, but just go for your 1 to 3s, whatever you're comfortable with. You can even just go to these highs, right? 500. That's still a 50-point trade right there, right? That's a nice trade, right? And then how do you stay in the trade? Again, like I just showed you. Look, we make a bullish gap, okay? Comes up, respects it, continues higher. So you start trailing your stop, and then you probably would have got taken out on this pullback. But shit, there's what is that, 100-point trade right there. So, and again, say you missed this, you're like, oh shit, I missed it. Don't chase it, just wait. Okay, wait for a pullback. Let's see what happens, how it reacts. You get this engulfing candle, boom, enter. Okay. And yeah, and then I can keep showing you examples of these. Happens again. Okay. Say you miss this push up. We get a reverse bearish gap. It trades down, retests the gap, pushes lower. Okay. There's another one right here. and then look at this, comes back up, respects that gap, and then it flushes. Okay, and then here's the bullish again. Okay, boom, boom, and so it's stair stepping, stair step, stair step, stair step, stair step. Okay, so dip buying is kind of, it's the same thing, and I'm going to show you right here where dip buying is just like it, but without. I mean, this is a dip buy right here, and then you also have more confirmation because it's respecting a bullish gap. Like I said in the beginning of the video, not all dip buys go to a gap. It also can go to a support zone or a resistance zone. So right here, look at this clear. Oh, sorry. Look at this. Let's get rid of that. Okay, we push higher, come back, boom, support, support, support. We push higher, we come back, support, support, push higher, come back, support, right? So what I do is I buy these dips, and this is on the 1 minute chart. Let's see what it looks like on the 5 minute. Okay, so we push up, boom, we come here. You could get in on this dip buy here, put it below the gap a little bit. You would have been safe. Okay. Um, But yeah, so that is dip buying, right? A lot of the times it does come to fair value gaps, but I just want to show you that it's not always two gaps. It comes to, all right, so right here, actually, that's a fair value gap too. So, okay, right here. So here is a support level. Here's a support level. Okay. Goes up, dips down, respects it, bounces up. Okay, what's it do? It comes right back to this. Comes down, dip, boom. And yeah, you can get these little quick trades on dip buys. Why does it keep doing that? So that's pretty much it, guys. It's really not that complicated. So after you do it a little bit, you'll get more familiar with it. You'll be able to spot these things. You'll get more comfortable with taking those trades. And yeah, so that's pretty much it, guys. I hope you learned something from it. Let me know what you think, and I'll catch you on the next video.